following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Dan Gramza, Chicago, Illinois, trader extraordinaire. You've been around for a while. Dan, how are you?
I am doing terrific, Jim. How are you?
I'm pretty good. I'm convalescing a little bit.
Well, yeah. What's going on with that? Are you over the hump on
Okay.
this whole thing, or?
I'm over the hump, right? I'm over the hump. I'm gonna have this like cough for another 5 days or so, but there is this great invention, and I'm sure you know more about it than I do. It's called Ricola, and it's like this is like magic. I bought stock in this thing a couple days ago. It's brilliant.
Yeah, I remember seeing that a lot when I was in Stockholm. Ricola, and there's another one that's a cough drop type thing they have there, and it's actually very good. It different flavors, and I can't remember the name of that one, but I think Ricola is Swiss, if I'm not mistaken.
You remember the commercial, right? There's the guy with the ladder hosing up there on the top of the mountain with that big horn. You know what I'm talking about.
I do, and I totally forgot about that.
Oh my God, it's a classic, man. It's
yes,
classic.
it is. Yes,
oh,
it
man.
is.
Well, I appreciate you being here with us in this extended segment here. We are going to take a break at the halftime, so we'll have a little bit of a break. But we really wanted to talk about how you view support and resistance as an example, and we could, the nice thing is we could apply it to like some daily charts, and at the same time talk about what those markets are doing. What the state of those markets are, the key CME group markets. How does that sound?
That sounds perfect. I'll
So
follow your lead, Jim.
Okay. One thing I did differently today, which I never do, I changed my historic charts to they're back adjusted. They're continuous, but they're not back adjusted, right? So you see these gaps here. And I usually have them adjusted so these gaps get smoothed out. First question is, how do you feel about the best way to do technical analysis with that kind of with this futures data?
Well, the continuation chart to get that longer term point of view really is important. And there's a variety of different ways of doing it. Some programs will give you a roll date where it actually rolls into the next contract. It really kind of varies quite a bit. As long as, from my point of view, as long as you know what the reality is, that if that gap's there and you understand why it's there, I really don't see a problem with it. The issue is when you see it and you don't know, is that a misprint, or is there a data, or is there news that I'm not aware of? Was that a problem with my data? And in this case, no. It's just,
right.
The way you set that chart up. So, and where it could come into play, though, is when you have mathematical studies. So depending on how your mathematical study is calculated, that can have an impact. Is it on last price? Is it on the previous price, and it's not calculated until the next price finishes? So depending on how that's done, then you could see some variation in a mathematical study. But price-wise, I don't think it's a problem as long as you and I know what's there and why.
Okay, so let's explore that for a second. So I have 3 different moving averages on the chart. The red line is an 8-period exponential. right? Not affected, right? Because we're talking about the front month, it's calculating the front month. The green line is a 21 period exponential. And again, we have more than 21 pieces of data. Well, I guess it is affected in the sense that this is a moving average. So I shouldn't say it's not affected, but the last data point's not, right?
Right.
And then the 50 certainly is.
Yes.
So thinking about that, maybe, so I'm going to amend my statements to say, yeah, it is affected because it's rolling, but it gets to a point where it's not anymore.
That's correct. It goes back, since you're looking at moving averages, it goes to your look back period. Are you looking back 8 periods, 21 periods, 50 periods, right? So
Yeah.
that the 50 period, yes, it will, but you have so many data points after that right now, it does start to get smoothed out. It also, and it does go back to the sensitivity of the study that you're using. So we know that 8 period's going to react a little faster than the other ones when it's at that gap phase. But once you get 8 periods beyond it, then it's not an issue at all, actually. So the sensitivity of the study is kind of determines the impact here. But you have enough data here that we're not seeing a blip. We're not seeing dramatic changes in that. Where, if you look at oscillator studies, they could be more sensitive. So if you look at RSI, stochastic, CCI, momentum, all those type of things, they may have a little bit of an impact. But again, it goes back to you and I being aware of it and then how we would interpret it. So during that gap phase, then maybe we lessen the weighting that we would put on that because of the data that we have in front of us.
Totally makes sense. So you're making an argument for me. You're making an argument for me to go back to back adjusted, right? Which we could do. We do it at the break. We can go back, but we'll keep it here for now. The way the software works here, you could easily change it. Go to the tools, and I'm just going to show everybody how to do it. Go to tools, go to options, a pop-up menu appears, market data, and then you'll have a global merge policy. And I have merge non-back adjusted. If you hit the drop-down menu, you get do not merge, you get merge back adjusted, or you got merge non-back adjusted. So I would toggle back to this one, merge back adjusted. Anyway.
What's interesting, Jim, is you have the flexibility to do that. I mean, you're doing it because it's a part of this function. It's very straightforward in how you're doing it. A lot of programs, you don't have a choice. And that's really what you look for in a trading software is how much is cast in bronze and how much do I have flexibility with? And some people would say, oh my gosh, too many choices, not helpful. But as someone gets more comfortable with what they're doing and the techniques that they're using, those adjustments can be very friendly. And I think having the capabilities a lot better than not having the capabilities. So I think that's terrific.
Well, I appreciate that. That's a nice plug for NinjaTrader for sure. It's great.
Well, it is just the reality of what you just showed.
Yeah.
I've seen a lot of software, so it varies quite a bit.
Oh, I bet you have. Yeah. Yeah. No, I have too in my career.
Sure.
For what it's worth. But anyway, all right. Well, we'll stick with this for now. Mike Burke likes the way I have it. Tom Schneider likes to do the adjusted. So, and I rely on these two guys. And when they're divergent, it doesn't help me whatsoever. So,
well, you can just switch back and forth once in a while and see the impact.
Yeah. All right. So let's think about some of the markets. Let's talk about this idea of support and resistance. And one of the things I do, Dan, it just makes it easier for me, is I love to draw rectangles, right? And because I view support and resistance, especially in the futures markets, as an area, not as an exact price point. So when I'm drawing my rectangle, what I'm looking at is, all right, here's the time frame I'm going to analyze. And then I'm going to put for support, I'm going to put the top of my rectangle. I'm going to touch it to the lowest body of a closed candle. And then I'll use a little bit of an art to extend it down a little bit, a certain distance. And then I'll say, this is my area of support. What do you think of that idea?
Well, I have to tell you, there's a couple of things that I find interesting about it. One, let's start with your top of your rectangle.
Yeah.
At first I think it's very logical what you're doing. The body, using the body, that means all those little shadows or wicks show up on the bottom, right?
Yeah.
And so it
Yep.
tells us, I kind of call that a rejection zone when you
Ah,
see shadows, right? It's rejecting that lower price. When you saw the bodies that you're looking at, it accepted that price at that moment. The other thing that's interesting about the chart that you picked, the bottom of your rectangle is the bottom of that benchmark candle over to the left that stayed dominant for quite a while. If you look at that price action, excuse me, see, you got me coughing. But if you look at the midpoint of that benchmark candle,
you need some Ricola, Dan.
yes, yes. Now I got that commercial going through my head after you mentioned it. But if you look at the midpoint, right where you
Yeah.
had that,
Yeah.
we're basically staying around that range, which means that's still dominant for that part of the phase. And when we did dip down, we see shadows there. We see those wicks, which implies they're buying the break. So the way you drew that, I think, is really interesting. And you could think of that as that rejection zone, which is what you're showing us.
Yeah. Yeah. So, okay, good. So, I mean, again, this just helps me just mentally process the information quick, right?
Yeah, understood.
Um, and so you could do the same thing. I would do the same thing on the top. This is not going to be as good of an example, but I would be like, all right, bottom of my rectangle here is going to touch the highest body of a closed candle. And then again, looking for wicks and all of that stuff. Top of the rectangle, it's a little bit of an art at that point when there's nothing up there, but we'll go ahead and do it anyway.
Well, I guess yes, there is the way you drew that. But there's another thing we could look at, and that
Yeah.
is what's the rhythm of this market? When it has a tendency to move higher, it has a tendency to move higher by how much? Is there a particular behavior that you and I could look at? So we'd say, when we have a tendency to move higher, it's about 5 ticks, it's about 10 ticks, whatever it may be. Is there a consistency there? And how does this high compare to previous highs that we've seen in the past? Is this typical behavior? Is what you're seeing there to me on this chart is you have those wicks at the highs, right? Then you
Up
have
in
a
here.
green can. Yeah, exactly.
Yeah.
Then you
Yeah.
have that green candle and the red one right next to it. Excuse me. If you
Yep.
add those two together, the last two, the green and red, that
Yep.
would form a shadow on the highs. So the market it's been consistent. They're selling the rallies. That's what
Okay,
we're seeing.
let me slow. I understand what you're saying, but let me just explain this a little bit different, a little bit
Sure,
further, I should say.
sure.
So I'm just going to draw. What you're saying is, if we combine these two candles, if we combine these two candles into one candle, then what you would have is a big wick at the top instead of any color, right? In my rectangle, which would be consistent with this wick and that wick and that wick.
And you'd have a big red body on the bottom. So
Right.
what we've seen for the last, if we add all those periods, the last 4 periods, this market's been very consistent. So now that's in hindsight. From my
Yeah.
point of view, when that green candle occurred, we
Yeah.
don't know what it's going to do next. We can
No.
talk about it now, but what we would want to do is to put ourselves on alert. The bottom of your rectangle we have seen sellers as it's approached that in the past. So right now, do we expect this to move higher? Yes, we see some buying coming
Mhm.
into the market, but we also know that this is an area that they have consistently been selling. And the next period will tell us that. So is the next period green where buyers continue higher? Or in this case, we found
Boom.
sellers, but
Yeah.
it's consistent to the other action that we've seen.
Okay. So another, I love that's a great observation. I love this because what we're saying is there was no continuation buying. Buyers are exhausted. They didn't go any further. And that this was temporary. This was a temporary condition. And finally, the sellers took over.
Correct. The other way to look at it is those shadows or wicks that we saw previous. If we go with the idea, as you know, I look at is that represents selling, right?
Mhm. Mhm.
Then the issue is we've seen selling coming in, but we're not seeing follow through to the downside. So it's kind of holding its own. And it could be because it's waiting for a report. It could be because it's waiting for fundamental information to make a commitment. And
Yeah.
in this case, maybe that fundamental information came out. It wasn't favorable. Now the sellers really had a chance to hit that. And then that's what we saw here for the next 3 periods.
Right. Okay. So let's get into that. And I drew a piercing line here, a midpoint piercing line. What do you
Mhm.
refer to it as?
Well, from my lingo, I would say the top of it is a market getting ahead of itself. And the issue is the midpoint and the lows, how the market behaves at those. Nothing wrong with what you said, that it would be a traditional way of using that.
And I measured it from the body of the candle, not and ignored the wicks. Is that
Uh, For that pattern that you're
yeah?
talking about, yes.
Okay.
From, I think, a price point of view, we could look at the whole range to
Okay.
give us a feel for what's the dynamic of how that was created.
Okay. Got it. All right. Awesome. Um, excuse me. So sell off, continuation selling, right? And so I drew that this piercing line the next day with the idea that all right, let's see if we recover, if this was temporary or not. And it wasn't temporary, right? We had three consecutive pretty big red days down.
Right. And that, when you have three candles about the same size, these are a little bit smaller, but big, excuse me, it's very difficult for a market to sustain that. I mean, I don't know what we're looking at, but if you squeeze that up and look at the history on this chart, having more than three red candles in a row without some kind of adjustment or green uh, is not going to be very likely. See, you got
Right.
three green on the bottom, then we took a rest. I
Mhm.
don't see three red here in a row. It's not typical behavior. So it's getting a little stretched. And in the original Japanese candle concepts, uh, the idea, they didn't have oscillators, they didn't have mathematical studies. Uh, but what they did focus on was how a market moves. And those three red candles, um, I just wouldn't expect to see that in this chart. Now, you and I just looked at it and we saw three green, but then it stopped.
Mhm.
Three red, we haven't seen that. So it's not typical behavior. In a sense, it's getting stretched. Does it mean we exit? No, there's no reason to. Just we want to be aware of that this is getting stretched. And we saw some buying. This is the S&P.
Yeah.
Um, we saw some buying coming into that yesterday. And today, we're not seeing that follow through. It's very balanced. So is that because this market is waiting for fundamental information to do something, that we're not seeing that commitment to the highs, doesn't mean it can't go higher. Not at all. It's just a balanced market condition. It doesn't have a reason at this point, and may later in the week, to do something fundamentally, to have an excuse. So, and if you look at the candles on the bottom, we got low enough to find rejection.
Yeah.
You know, if we think about adding those two on the bottom together, you have a small green body and a big shadow on the bottom or wick.
Right. Right. So, all right. So just to kind of get my head around that today so far,
Mhm.
right. All right. So we had this turnaround yesterday, which isn't unusual. Today we have a small body candle. And when I see small body candles, and I use your words to describe this as price happiness, right? There's equilibrium here. Buyers and sellers are kind of happy where this is at right now. They're not pushing it around too much. Or on the other flip side of the coin, market uncertainty. Nobody knows which way this thing's going, so everyone's just kind of waiting.
Yes, I all the above.
Okay.
What you're saying there, and so it implies if you think about the big red candle, that's imbalance to the sell side. The big green candle yesterday, imbalance to the buy side. Today, balance. And one of the ways markets move is imbalance to balance. And that's kind of what we're seeing here. It implies a market, again, waiting for an excuse to do something. I mean, on Monday, we had a lot going on over the weekend,
Yeah.
and so how did the market respond? Not just to that, but we had other things happening that the market was setting itself up for. So what's interesting, that's a Monday. So what day of the week was it? And how did it want to start the week out? Friday, we went home short. The
Yeah.
market said, and again, we'd want to say, gee, 3 down, not typical. It's getting stretched. It doesn't mean we're going to find buyers on Monday. It just means we should be aware of that. And
Right.
now,
Right.
do we get any kind of level of commitment? And there's, big fundamentals coming out this week, especially Friday with PCE. And we got earnings reports coming out too, right? That can add to this market.
Yeah, me and Tom were talking about that. We have the earnings coming out after 4 o'clock. We have a relatively low volume day today is the E-mini S&P, the classic E-mini S&P. And I kind of use that as my gauge to whether or not there's a lot of institutional participation or not, right? Because we're going to get, it's great volume, but it's not high enough in my mind, especially during the opening range. We were monitoring it to suggest big institutional involvement.
Well, you figure that that's a good way to look at it because on the open, if you think about the days of the floor, you'd have a bunch of orders at the open and at the close. And you have institutions, they have resting orders that are getting ready to be hit or to be activated. I shouldn't say hit, to be activated. So on the open, I want blah, blah, blah. On the close, if it's this, I want this. So we see that bunching of orders, especially when we had a floor. A little bit less so now, but I think that's a good insight that you're mentioning there.
Yeah. So we'll see though. Yeah, we had PCE, we have another jobless claims coming up. I think there's another one on Thursday also. I can't remember exactly what it was, but um I could look it up here in a jiffy. I'm just going to go to the Google machine. GDP, durable goods, international trading goods. Yeah, so there's a slew of stuff on Thursday.
Right.
Yeah,
Right.
so
And
it'll be
durable goods, do people have money? Are they willing to spend it? Right.
mhm.
That's kind of that confidence level type thing. It's the way I think about that.
Right. Durable goods, we're talking air conditioners, washers, dryers, microwaves, hair
Anything,
dryers.
yeah, anything that lasts more than 3 years.
Yeah.
That's the filter.
Although
But
I
you're
just
right.
bought this new like underwater pool robot.
Oh, hey, that's cool.
Yeah, it died after 3 months. It's not quite. It wasn't durable.
So, so yeah, it's not in that durable goods category, I guess.
Yeah, yeah. Alligator's fighting with the company to figure out what to do.
Oh, gee, that's
Yeah.
too bad.
Anyway, I know that's if that's my biggest problem though, I'm doing okay.
Life is good. That's right.
Yeah, for sure. All right, so let's take a look at some other markets. I went and I back adjusted my charts. I went through a little bit of exercise to do that. I have copper up here now, Dr. Copper daily chart right now. And the first thing I just wanted to mention was, I was wondering how far we're down from a percentage point of view from May 20th, right? So here's the high in May 20th. Here's the low right now. And I just kind of measured it with one of the tools that we have at our disposal. And according to this, we're down 20.29% in a very short period of time.
As it should be.
Really?
Yeah. I think we got more room to the downside. And it's, what you saw earlier at those highs
Yeah.
was you saw an enthusiastic market. Economy is going to come back on board. The demand's going to be there. Copper's going to be headed up. Other countries are doing well. That was the expectation back there. And what did we see? China's economy really didn't recover. China's real estate sector has got big problems that really haven't been solved yet. And if you think about copper, what's interesting is we have no substitute for copper. So this is not a matter of, well, people aren't eating chicken, they're eating beef. Not that kind of a situation here. So we don't have another market. The other aspect is where China fits in. China consumes over 50% of the global supply. China's smelters, the people who process copper, process 48% of global supply. And we've seen some smelters there shutting, some facilities down because they're not getting the demand. And this is a demand supply situation. Excuse me. We have a
So
lot of supply, but we're just not seeing the demand. So I think it's doing what it should do.
so why doesn't some of the developed countries just go all out and say, all right, we're going to start building some smelting facilities. We're not going to offshore anymore. We're going to do this here. Why is that not happening?
Well, that's a great observation. But one of the issues when you talk about that aspect of this market, it's capital intensive.
Mhm.
To build a smelter, it's like, steel refiners. It's expensive. It's a very heavy capital industry. And then we've got regulator issues. You got where you're going to put it, and is that going to be you're going to be able to get that done? And the turnaround time. So for me to go, yeah, I think we should do what you just suggested, which makes sense, to actually having an operation in place, it's going to be a few years. It's not going to be something we're going to see reflected here. And what we could say, gee, this is so cheap. Our cost of goods, uh, the raw stuff, yeah, I think what you're saying is very logical, but we haven't seen that.
Yeah. I mean, if I'm thinking in terms of, all right, if this push to the electrification of the world is truly here to stay, right? Which it looks like it is. I don't know. I don't have a crystal ball, but it looks like it could be. Then maybe long-term planning, some folks with some insight would step up and say, "Hey, all right, let's prepare for this."
Yes, that would be logical. And the demand for copper, if you talk about cars, it typically right now, gasoline cars, it's 44 to 99 pounds in a car. It's 4 times that amount if you're looking at electric car.
Yeah.
So, housing construction, 400 to 600 pounds of copper. So in the past, we could look at housing permits and housing starts and say, geez, we expect to see that reflected in some of the demand for copper. we're not seeing that sensitivity, primarily because China is such a large part of that market. And what we've seen with this is the same thing we see, with exotic metals, rare earth metals products, is it got so cheap that we couldn't compete with it. So our mines, it's not that it's rare, but our mines in the West Coast, they started shutting down. They couldn't compete on a price basis. And now they're kicking them back into gear. In
Yeah.
fact, the Department of Defense asked one mine to start producing product for them. We use so much in a new aircraft, for example. It's a little scary, actually.
Wow.
But anyways, I say it's scary because a few places control a tremendous amount, China being one. They if you look at Japan a few years ago, China said, hey, we want this thing, blah, 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 whatever it was. Japan said no. And China said, okay, no rare earths for you. And before you knew it, Japan said, well, we've thought about it and maybe we should do that.
No chocolate pudding, Dan. No chocolate pudding for you.
Or no soup for you.
Yeah. Let's go. Let's just, all right. So let's think about this chart in terms of support and resistance. Again, what I like to do is work the rectangles. I love the rectangles, right? So I'm going to put, support. I'm going to have a little short-term support up in here, which we broke through. And then I'm going to kind of extend that support over a little bit. And it was off to the races, right? So there was this chart's telling me, and I'm interested in your opinion, that once this support broke, there's no challenge to it.
Well, yes, I would say that's true because you look at that red candle that broke below that guy, that first one kissed it below. That
This
guy broke
Okay.
below it. The next candle, from my point of view, would be critical. If the next candle was, yes, if that guy would have been a green candle next to the red one, it's what I call an equal and opposite. That could have been a change in market direction. Here, we saw now sellers came in with both hands. They really hit it. What's interesting now is we're seeing a change in behavior. Still going lower, yes, but look at how it's doing it. Are the bodies getting bigger or are the bodies getting smaller? Are we seeing more momentum or less momentum is what it's revealing to us. So, and it's cheap. Have we been cheaper? Yes. I mean, you don't have to go back very far to see that we've been down at below these levels. So it's, like back there, not that long ago.
Yeah. Yeah. This is March.
Yeah.
Yeah. We were trading, we were wicking through that $4 even level on a back adjusted chart in March.
Well, yeah. And look at that behavior there. It was really a struggle down there.
Yeah.
Got shadows on both sides, the wicks on both sides. So we know it wasn't an easy transition. It was that balance phase. And it was a market waiting for an excuse to do something.
Okay. So on that point, let me kind of expand a little bit. So let's take a look at these last three candles here, where, the last two anyway, there's a decent wick on top, a little bit bigger wick on bottom. Today, decent wick on top, a little bit bigger on the bottom. Would you say that there's a struggle going on?
Yes, they're buying the break. They're selling the rallies, buying the break. So, somebody's saying what you said earlier, your insight, it's cheap. And so somebody's accumulating, or they're trying to, in a sense. So maybe they're hedging. Maybe they're trying to lock in some of these lower prices. But we're not seeing it enough that we're seeing follow through yet.
Yeah.
So is it a change in behavior? Yes. Is it enough to turn this? I don't think so. We just haven't seen enough commitment. But what you're saying here too, you and I should be on alert, right? Because of those characteristics, we should be sensitive to the fact that, we're seeing a change in behavior. If you look up to about the middle of this chart, you had that green candle towards, it's where your rectangle is. Sorry, to the left. The
Oh, right
keep a little bit more. The green, there you go, that guy.
there. Okay,
All
gotcha.
right. So look at that transition. One of the things we could say about copper is when it does have a tendency to bring buyers back in, since we're looking at the buy side, what kind of transition do we see? What's typical? Does it have a dramatic blow off top? Is it that kind of market? We see those in beans and agricultural markets oftentimes. Or is it just a loss of momentum kind of top or bottom? And copper, if you, yeah, see, it's such an interesting market, and it's orderly. If you look at those large red candles, those what I call benchmark candles, they stay dominant.
Yeah, there's one. There's
Yeah,
one.
there's one.
Yeah,
So we
there's
know
one.
yeah, and the big one we have towards the beginning of the chart, everything stayed below the midpoint.
Yeah,
That one,
this
right?
guy.
So that that one stayed towards the bottom, but
This
there
guy
you
here.
go, that guy. Yeah.
Yeah, yeah,
So those kind of references, and the two green candles before that stayed inside the range of that red candle. So it implies that's still dominant. That means at the second green candle, it could be decision time. We don't know it's
hmm
going down,
right
right?
here.
And
Yep.
buyers could take it out, but
Yeah,
we should be on alert. Maybe you and I tighten our stop up because of that.
yeah,
Maybe we position ourselves to actually go short
yeah.
under that environment.
So Dan, you mentioned benchmark candles.
Mhm.
Do you have a definition? Is it a percent? Is it just you visually could see it?
Well, it's actually both. The way I look at that is that it's the most recent period with the greatest volatility.
Okay.
So the last big one is really what
Okay.
we're looking at. So you look at behavior that led to it, and you look at behavior afterwards. How does the market respond to that? Here, it continued lower,
Yeah.
right? And that big red one, if I remember correctly, there were some fundamentals that came out of China, and I think it was regarding their real estate. I think it might have been their real estate market. I have to think about that, but that was a response.
It seems like it's always the real estate market there.
Well, it is because they overbuilt. They were
Yeah.
giving people's jobs. Said, hey, we could just keep building this stuff, and we keep our economy going. And you got to have people that occupy them. I mean, they're tearing some of those things down. And so if you look at, well, and also in here too, the dollar comes into play. This trades in dollars.
Yeah.
So, the stronger the dollar, that puts downward pressure on this market as well.
Yeah.
So,
Yeah.
right? So that
Yeah.
comes into play as well.
All right. So let's pivot over. I think silver is an interesting chart to look at. Let's go and
Okay.
check out silver because it hasn't been the same as copper, hasn't been the same as gold. And it seems to be more cyclical lately. When I say lately, last couple of months. So let's take a peek. I think this will give us some good talking points here. Again, my rectangle is in play. I hit the
Yeah.
bottom of the body. We wicked through it way back here on June 13th, and we're wicking through it today.
Yeah, it is. It's really been a range bound market. Silver's an interesting one because on precious metals, it can lead that complex. It can lead gold. People always think of gold being the real barometer, and it can be silver as well, but we haven't seen it. As fast as we go up, we come right back down. So
Yeah.
there's no follow through is what we've seen that. And the result is we've been in this sideways move. This lows that you pointed out, I think are terrific because it tells us something about how does the market make the lows. It's different than how it's making highs. The lows, we see all these shadows or wicks on the bottom, right?
Yeah.
So again, they're buying the break. We saw smaller bodies as we go lower, so loss of momentum, son of a gun. But we still haven't turned the corner yet. So yes, have buyers been here the last 3 days? Yes. But is there any follow through? Any follow through the session after? No. Should you and I be on alert if we're short? Yes. Could this be a turning point? Yes. We're at the levels that you have pointed out, Jim, all the way across here that we found buyers before. So we're at levels that's cheap enough. They've responded. And so we should be on alert.
Okay, so let's kind of focus on, all right, so clearly a benchmark candle here on the 17th. I mean, it's a bearish engulfing by any measure, big sell-off, bigger than any candle just visually you could see, and a little bit of a wick on top, a little bit of a wick on bottom, but you would agree that's a benchmark candle, right? Or you would call that that?
Yes.
Okay, so let's kind of zoom in a little bit. Following day, what happened? So
it took
continuation selling. I took a breath. Okay.
Yeah, it did. So if you look at this chart, the probability of the candle, green or red, of that size, following through with another one, it would take fresh, new fundamental information. Because the way I look at it, let's say it was a fundamental that came out, Jim gave us that big red one that you're talking about.
Mm-hmm.
Well, the markets digested it. It said, hey, that fundamental that came out and we fell out of bed on? Okay, we absorbed it. We got it. And then what you see the next candle, the beginning of that is Asia, right? So because Asia doesn't have a chance to respond to what that guy, that's Asia sets the tone of still absorbing that information. But the previous day it just sprinted. And so we catch our breath. So it goes from imbalance to balance. It's those principles. And here, this last larger red body is that near-term benchmark candle. I'll tell you, well, I don't want to add something on top of that, but yeah. And so do we get above the midpoint of that candle?
Yeah.
That'd be the next thing we'd want to see if indeed buyers come back in.
On this candle, Dan, it looks like maybe we took a breath, maybe we had a reset, but then the market decided no, we're not resting anymore. We're gonna go ahead and attack we're gonna attack Jim's rectangle
because fundamentals coming out of China. It goes back to that this is demand issues that we're seeing here. So do we have tight supply? No. Globally, there's copper. It's just not being soaked up. We're not seeing the demand to bring it in place. And that's the stimulator for these last few days that we're looking at here. People are, they're anticipating demand coming in. They're anticipating that China will heat up enough. And we just haven't seen it.
Yeah. So, okay. So we have this big sell-off again. I think you said near-term benchmark, and with a really nice shadow at the bottom.
Mm-hmm.
Is shadow the right word or wick the right word?
Either one. If you look at the original, when I first saw this in Japan, they used the term shadow. That's how it was explained to me. But either term, wick or shadow, either one.
Got it.
Wick, okay. I think for most people make more sense because if we think of it as a candle, Therefore,
Yeah. Okay, cool. All right. So again, we got to a point as you said, buyers are buying breaks, right? That's what represents this wick at the bottom.
well, that one on that particular day is
Yeah.
probably people taking a little profit at the end of the day,
Okay.
right? That's why
Okay.
you typically would see that.
Mhm.
So it's not a change in behavior. It's more, I mean, if you look at these, almost all the candles, if it's a biggie,
Yeah.
if you don't see that, then it says, oh my gosh, everyone was willing to stay short going home. And
Mm.
here, so people maybe, who knows, but could be people saying mine at the end of the day.
Got it. Okay, that makes sense. That explains that pretty nicely. The next candle, right? And forget about the red for a second, because the way that the data works is it goes to the settlement price and we have the Globex price. So sometimes all the candles aren't colored the way you'd expect that they should be, but that's why that is. But the next day, we pretty much ended up where we started the day before, except we have even a bigger extension on the shadow at the bottom.
Exactly. And so if we think about that being getting low enough to find buyers, it tested a new level and they said, oh my gosh, copper is so cheap. Look at your rectangle over to the left. Look what you've identified, Jim. You would say, hey, look at they bought it here before. And son of a gun, they're coming back in. But do they
Right.
get paid?
Right, right. And so let's go to today, right?
Mm,
Today, lower high, lower low, deeper penetration into the rectangle. We have an anchored VWAP here, by the way. That's a whole nother conversation, but
yeah,
we
and
touched
that's
it.
working.
Yeah,
Yeah, it's kissed it. Yeah.
yeah, kissed it. But even a bigger, well, maybe not bigger, about the same size shadow on the bottom. It's hard to tell without me measuring it exactly, but still a pretty big shadow at the bottom.
Yes. So we're seeing consistency of behavior. They're buying to break. And so
Okay.
it's the behavior that we're seeing here, which puts us on alert that a couple of things you've identified. We found buyers at these levels before, and we're back there again, and we're seeing that same behavior because it is cheap. And now, but the thing is, people may be buying it, but where are you tomorrow? Right? They're buying it today. Are we going to see new highs tomorrow? Are these people who's creating this right now, are they going to be there? Or they say, I have enough?
I don't know.
Or are they saying, we got the hedge on? And if it's hedging, you don't typically see a strong follow through. It's not
Ah,
unusual not to see that because what are they doing? They're locking in prices. So they're done, right? There
right.
should
So
they be
they've put their trade on. They're holding an open position for a longer period of time, and
correct?
then whatever happens after that is speculation.
Correct. And they don't
Yeah.
really care in the sense they've already protected themselves. So hedgers' behavior in a market, I find interesting. So they're if that is indeed the case, they're done
Okay.
unless they need to manage the hedge. But
So
that's
if that's the case, then I could make the argument. Okay, we have found support. We have found real true support. Probably not going to materially break any lower than this, and therefore look for some sideways price behavior.
I agree with part of what you said
Okay.
when you said it probably won't go any lower. Um, that makes me nervous because because well actually I'll tell you why it makes me nervous because I remember a fellow I was in St. Louis, he traded cattle, and I remember him calling me and saying I'm buying cattle here, and I said why? He says it can't go any lower, uh, and he bought it on a trend day down. It was 3 weeks later he was right. That was it went a lot lower, but
Yeah.
he
Yeah.
was just early. I'm sorry, Jim. I'm just giving you a hard time, but
No,
you
no, no,
are
no.
right.
That's a good observation, and I appreciate that. I guess I'd and now I'm going to amend my thinking a little bit to suggest that what's this behavior? Is this behavior going to continue? Is it going to give us further information to suggest that okay, maybe we're done with the down move? And I think the shadows are going to be important in that. Do you?
Yes. And but we could take your idea a step further and we could say when it comes to that level that you've identified, how many periods does it rest there? It's three, hit it 3 times right now. Is
Yeah.
that typical? Is it 2? Will it go 4 or 5 now? Or do we actually see transition? The only other thing I would add here, fundamentally, do we have a reason for a rally? And at this point, we don't. And Jim, what's interesting here is what you've shown us, these shadows or these wicks, if we take them out, if we trade lower, it should be a huge move. It should be very volatile because we just said those lines on the bottom represent buying. That means if it trades lower, all those buyers are losing money. They sell to get out and they add volatility. So this is potential energy being tucked in to these shadows on the bottom. It's the
And
way
we
I
know,
think about
and
it.
we all know what happens to potential energy eventually.
It becomes kinetic.
You got it. You got it.
See, you must have
Okay.
gone to IIT.
I did. I did. Anyway, all right. So we got time. Oh, barely. Let's really quickly, very, very quickly, just shoot over to crude oil.
Sure.
So I got the SEP 2024 contract up right now. And just real quickly here, what are we seeing here? We have a benchmark candle. We have, a pause maybe, and then we have continuation selling, 3 candles in a row.
Yeah, and that fundamentally it makes sense. We got a lot of crude out there.
Yeah.
We're not seeing the drivers of consumption of crude to really change the picture here. I think it's reasonable. It's what we see in these energy markets is that's right, is the anticipation. That's what we're looking for here, and we're just not seeing it. Nat gas is in the same boat. It's
Yeah.
cheap, but it's like what you're showing us here. I don't see fundamentally why this should change right now. So if we were
Yeah.
short, we ought to stay short until we see a change in behavior.
So, all right, last question here. To your point, this benchmark candle does not have a shadow under it,
Yeah.
right? We closed at the lows just about.
Yeah.
And then the next candle here, yeah, we closed a little lower, but we wicked down a lot lower.
Right.
So this was like a test in my mind, right? Buyers came to the rescue a little bit, but they couldn't survive today.
Well, and it could be profit taking.
Okay.
Right. And see when it took out the shadow, look how it's done it so far. And the day that it closed at the low, that was Friday. So on Friday on crude, did anybody want to get out of a short position? Were they willing to hold a position over the weekend short? Yes. That's what it says to us.
All right. All right. Well, Dan Gramza, my good friend, thank you for stepping up today, agreeing to kind of fill in. Our previously scheduled guest got ill at the last second, so he'll be okay. But we needed a rescue. So I phoned a friend.
Well, I'm glad you called, and it's always great to be with you, Jim. And I hope you feel better.
Oh, I'm around I've turned the corner. I'm okay.
All right.
So thank you for that. And then dangramza.com website, right?
Yeah, that's still hanging out there.
Yeah.
Every day we look at 22 different markets.
Yeah, great place to get some information. You have some free studies, you have some non-free studies. You do it every day, which is amazing to me. You've been doing it every day for what, 15, 20 years now?
I think it's something like that. It's like, geez,
Yeah.
it's talk about daily routine. That's one of them for me.
Yeah, for sure. That's awesome. All right, everybody. I encourage everybody to go to dangramza.com or LinkedIn. I know you do a lot of stuff. You throw some stuff up there on LinkedIn, which is good too.
Thanks, Sam.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.